All right, Abhay Agarwal is here with us. Abhay, how are you analyzing the market? I saw some of your stocks have been doing phenomenally well. Let me be the devil's advocate. Some of the healthcare and diagnostic names in your portfolio have done phenomenally well. But now the view is also emerging that probably the best for hospitals and healthcare is getting over because of vaccine requirement, vaccination happening at a full speed and all of that. So demand could actually ebb out in the medium term. And this has had a phenomenal run in the last 3-4 quarters, Apollo hospitals in particular. But what are your thoughts on the way healthcare will be seen now? Will it still get the same premium it used to get for last 1.5 years?
To be talking to you again. I think the whole sector has gone through a tremendous reawakening, that people have woken up to the fact that healthcare is something that is very important. And both from the perspective of protection in form of insurance and in form of treatment. And the treatment also encompasses not only hospital care, but home care, diagnostics, pharmacy, follow-up treatment. So the good thing, the good outcome, if at all, of this tremendous tragedy that we have gone through is that there is greater awareness of healthcare. So I think that will continue. I think that will only pick up pace as people get richer and can afford better healthcare. So it is giving the healthcare providers an opportunity to scale up their operations, be more digital savvy, and grow the business in that manner. Talking about Apollo itself, which is one of our portfolio companies, we see a growth runway for many years, frankly. So we're not that fussed about the near-term performance or near-term valuation. The company has recently set up its fully owned subsidiary called Apollo Health Co., which is going to become the omni-channel digital healthcare company for the group. I think that's a very forward-looking, if I can call that a game-changing event, because now Apollo will for the first time go beyond its own facilities and will be able to onboard doctors around the country, provide pharmacy 2-hour home delivery. There's diagnostics in it already. So it's if you can call it a super app for the healthcare sector, which is already getting created. Not many people are realizing about it. Company hasn't talked about it in that manner. But we think that company will raise its own funds and grow. So we see healthcare generally and Apollo more specifically as probably a 10-15 year clear growth runway.
Right, fair point. Abhay, we also spoke about Zomato, which did phenomenally well, and your call was right on that. But also, interestingly, Nykaa would be the next one, then Policy Bazaar. But one is getting a sense that some 8-10, consumer tech companies are lined up, and is it not a case of crowding out the space because perhaps every company would not have the same robust model. Perhaps car trade is also in the lineup. So how should investors go about choosing which ones to bet on?
Now that is a great observation, Ajay, because as we have been talking, it's if I can say it, it's a hot IPO market right now. There is tremendous investor interest in backing IPOs. But at the same time, just like in the listed market, you have thousands of companies, probably 100 are worth investing in. In IPOs, it's, 50 IPOs come, maybe 1 or 2 are worth investing in for a long-term investor. So the investors will have to do their work of figuring out which of these companies are real businesses with tremendous growth longevity for next 10-15 years, because these are the businesses then will list and make tremendous value and wealth for their shareholders. But not every business will do that. So for the new tech businesses, new consumer tech businesses, if I can call them that, on the food side, it was Zomato. On the fashion and beauty side, it will be Nykaa. On insurance side, it will be Policy Bazaar. I think this is, in one way, if you can overlook the valuations that they will demand at the IPO, we believe that these are businesses that will not only grow, but redefine their industries for the next 10-15 years. And they will be great platform businesses for investors to own, because then if you get it right, if you have Zomato, you frankly don't need to own any other F&B business in your portfolio, because you have all the suppliers on one side and subscribers, millions of subscribers on the other side. Same goes for insurance in form of Policy Bazaar and fashion and beauty in form of Nykaa. So at the one hand, we are very excited that these companies are coming out from private and coming into public space so that investors like us can participate. At the same time, we will have to be careful that we do not end up backing businesses that do not still have the same market presence and the power that they need in their sector to demand that premium valuation.
Abhay, very quickly, two export opportunities which have been very large for India, which is exports of pharma, generic pharma. But in the last 3-4 con calls in the management results, one is getting that pricing pressure is coming back in US market. Similarly, IT, Indian IT, of course, also redefined the country and its own space in the global IT space. But again, some people called it a clear case of body shopping. But there was a silent digital transformation also underway. Look at how TCS, HCL Tech, even Infi now is at the brink of joining the $100 billion club. They continued working. How do you see these two spaces?
So, on generic pharma, our view has been pretty, I would say, not exciting, because when we meet these companies, we realize that it has become a commodity business with very little differentiation, and pricing is the only differentiator. So we do not frankly see, other than volume growth, value getting created there. IT has been remarkable. I personally thought that, these companies like Infosys, TCS, very large companies, very well managed, but at the same time become a little bureaucratic, very focused on time and material, not doing too much of fixed price projects, not doing digital transformation projects, losing out to larger international competitors like IBM, Accenture, Capgemini. But in last 12 months, they have remarkably got up on the digital curve. And I think one of the reasons for that is that they are far more competitive in their outlook and their approach than the generic pharma manufacturers. And I think that result we are seeing now, that a very large, increasingly large share of revenue is coming from real digital projects that these companies are doing. And I think that will continue to pick up pace as these companies learn very fast that is really the future. And at the same time, you have a bunch of mid-cap IT companies that have also learned that very well and are reaping the benefits of that. So I think on outsourced software side in India, I think the future is quite bright, and I think we will see growth even from large companies going forward.
Right. All right, Abhay, we'll let you go on that one. Thanks so much
Thank you so
for
much.
your time today.